Hi, this is Stuart Cooper, and today we're going to discuss what happens when the appraisal comes in below the sales contract price. So typically, when the appraisal comes in below the sales price, the borrower has to make up the difference because the banks will always go off the lower value on the appraisal. And then whatever the difference between the appraised value is and the sales price, the borrower typically needs to come in with that additional difference. So for this illustration that we're going to share with you, on $1 million purchase price, if the property came in at $950,000, that $50,000 the borrower would have to come into with additional to make up the difference or close the gap. Now I want to share with you a strategy that I've been utilizing over the last few months, and it's what happens is when there's an appraised value that comes in below the sales price, the borrower has a couple options, but maybe the borrower doesn't have the additional funds for that difference to cover the gap. So what can we do? Well, here's a remedy that I share with a lot of borrowers, and they're actually amazed by this. But sometimes what we can do is we can keep the down payment the same, and what we're going to do is we're actually going to increase the mortgage insurance just a little bit to offset the difference. And by doing it that way, borrower does not have to come in with the additional funds, and the payment only goes up slightly. So let's just walk you through this real quickly. So what we have here is we have $1 million purchase, 10% down, right? So that's what everyone's expecting, $1 million, 10% down, the rate 3.625, your payment, and then cash to close, right? But now we have to throw something into the equation where the appraisal came in at $950,000. So what happens if the appraisal comes in at $950,000? We still have the original purchase price of $1 million. We're still going to have a loan amount of $900,000, so we're not going to come out with any additional funds. The interest rate is still going to be the same, and the payment goes up a little bit. It goes up from $5,481 to $5,508, or about a $27 increase. And look, the cash to close is almost identical. It's just a few $100s more. And so what we did was we just did a little bit higher MI factor on that to offset the loan to value. So I think the key takeaway on this is that when the appraised value does not come in at the purchase price and comes in lower, you don't necessarily have to put more money down. Sometimes you just got to kind of think outside the box a little bit. So anyway, I hope this information is useful. If you have any questions whatsoever, feel free to reach out to me, and have a great day, guys. Take care.